Welcome to The Explainer, where we use data to make sense of the noise. And today, we are definitely deconstructing a massive market surge that had everyone talking.
So, get this, on November 24th, 2025, the NASDAQ, the tech-heavy index, had its best day in 6 months, a jump of 2.7%. The big question is, what on earth fueled this thing? Turns out, it wasn't just one thing. All right, so here's how we're going to break it all down. First, we'll look at the market's big comeback. Then we'll unpack the two main engines that powered this whole rally. After that, we'll see who won, who lost, and check out the ripple effects. We'll even look at some potential strategies for investors. And finally, we'll ask the big question, is this all hype or is it real momentum?
All right, first up, the market's big comeback. So just how big was this thing across the board?
So as you can see, all the major indices were in the green, which is great. But look at the NASDAQ, up 2.7%. That absolutely stole the show. I mean, it was the biggest single-day jump in 6 months, and it just dwarfed what the Dow was doing. It really tells you where the excitement, the real action, was.
Okay, now for the really interesting part, the two engines that powered this rally. What's so fascinating here is that this wasn't just about one piece of news. Nope, this was two completely separate but super powerful forces hitting the market at the exact same time.
And here they are. It's really a tale of two completely different stories. On one side, you've got Wall Street getting all excited again about the Fed maybe, just maybe, cutting interest rates. And then, on the other side, you have this bombshell breakthrough in AI that basically sent the entire tech world into a frenzy.
So let's talk about that first engine, the Fed. What happened was a couple of really influential Fed officials, we're talking Waller and Daly, basically came out and signaled they'd be on board for a rate cut in December. Now, for the market, that's like music to their ears. It instantly calmed everyone's nerves about money getting too expensive and just, boom, unleashed this huge wave of risk-on sentiment. Everyone was suddenly willing to buy again.
And then there's engine number two, the AI catalyst. This was huge. Out of nowhere, praise starts pouring in for Alphabet's brand new Gemini 3. You had major players like the CEO of Salesforce calling it a massive leap forward, and that was all it took. It sparked an absolute frenzy, sending tech stocks, especially Alphabet, through the roof.
Okay, so you have these two massive engines firing at once. What happens next? Well, let's trace the ripple effects, because a shift this big doesn't just happen in a vacuum. It creates some very clear winners and some very clear losers. And this chart right here tells the story perfectly. You can really see that risk-on mood taking over. The communication services sector, which is where giants like Alphabet live, just soared, up 4%. But at the same time, look at the other side. The boring, safe stuff like consumer staples, it actually went down. Investors were literally selling their safety nets to jump into high-growth tech.
And this played out with individual stocks, too. It was a day of wild differences. You had Alphabet, obviously, and its key AI partner Broadcom just skyrocketing because of that Gemini hype. But then, on the very same day, a totally unrelated company, the pharma giant Novo Nordisk, absolutely tumbled because of some disappointing news from their clinical trials. A perfect example of how the market was picking its favorites.
And you know, this wasn't just a stock market story. The effects spilled over everywhere. The idea of lower interest rates, that pushed bond yields down and weakened the US dollar. And what happens when the dollar gets weaker and investors feel a little more adventurous? You guessed it, riskier assets like Bitcoin and Ethereum caught a nice bid and rallied too. So the big question for everyone watching is, what do you do with all this information? What's the playbook for an investor right now? Let's see what some of the experts are thinking. All right, a few different takes here from the big banks. Morgan Stanley's crew is pretty bullish, saying they think the recent market correction is pretty much done. Over at JP Morgan, they're saying, hey, hold on before you start yelling AI bubble. You could miss out on some huge gains. And then you've got Wells Fargo looking ahead, saying if the Fed starts expanding its balance sheet again, that could just pour more fuel on this whole AI fire.
And if you want to see that change in sentiment, look no further than this number. This is the VIX, Wall Street's so-called fear gauge. It plummeted 11%. A drop like that is a huge signal. It basically means fear just vanished from the market, and a feeling of calm, or at least stability, was taking its place.
Okay, so let's say you're feeling aggressive and you have a high tolerance for risk. One strategy is to just lean into it, double down on this whole AI revolution. That means focusing on things like AI infrastructure and other high-growth areas. You could do that through some specialized ETFs. The huge risk here, obviously, is that you're betting big on a sector that could be in a bubble that eventually bursts.
Now, for a more stable, maybe cautious approach, the idea here is to bet on a much broader recovery, not just tech. You diversify into other sectors that have been kind of overlooked, like financials or utilities, the kinds of companies that do well when the whole economy improves. What's the big risk for this strategy? Simple. The Fed changes its mind and decides not to cut rates after all.
All right, let's bring it all home. We need to weigh the good against the bad, the hype against the reality. Was this day a real, fundamental shift for the market, or just a flash in the pan?
So the bull case is pretty simple and really powerful, right? You've got the Fed potentially on your side, promising cheaper money, and you have this incredible AI innovation story driving growth. It's a fantastic 1-2 punch. But the bear case is pretty strong too. Think about it. This whole rally was driven by just a few giant companies. It happened on a holiday week with low trading volume, and you can't ignore the fact that some of these tech stocks are looking pretty expensive.
And so that leaves us with the million-dollar question, doesn't it? Was this a truly sustainable shift? Something built on the solid foundation of AI and Fed policy? Or was it all just a low-volume illusion, a holiday week head fake? I guess the real test is going to be what happens when everybody gets back to their desks and the market really gets moving again.